Hello, America. Good morning, America. Good afternoon, Europe. I hope you're well. Hopefully, I'm coming through loud and clear. Maybe I should just check that I am actually coming through loud and clear. I'll just gonna view my own channel. 1 second. Go to live and let's see. 1, 2, 3 test. Wow, latency is good on YouTube. It's I'd say a second or so. Okay, so anyway, this is gonna be a short one, and that's not a rude joke. I just want to give you a very quick status. It is Wednesday, and well, I just want to tell you what actually has happened today and why I will not be trading with you. Yours truly is doing this. Let me just so what I have created is and obviously I'm telling you this because just because of the nature of what I do and how I want to help you and support you. By the way, I had someone reach out to me, as I do every day, and he strongly urged me to stop trading live because he felt that I wasn't trading live as I would perhaps trade myself. And I have to admit that he did have a point about that, that I am probably not as risk embracing when I trade on YouTube than I am with my own account behind the scenes. But I don't think that necessarily is a bad thing. Yes, I know that I am perhaps not creating the barnstormer of the account, but also, as I wrote to him, look, I started this account with £10,000 in January, and I've traded it live for everyone to see. Every trade has been executed in real time. And I think what I'm most proud of is not that I have grown it by about 65% in January. And remember, I only traded 7 days out of the 20 in February. That's not what I'm most proud of. The irony is that what I'm most proud about is the drawdown. I think the maximum drawdown that I experienced was incidentally on this Monday, where I had a drawdown of 4.7%. And I think a drawdown of 4.7% on an account that has grown 65% in a little over a month of real effective trading, but if you want to see it from the start of the year, that's good trading. So yes, perhaps I'm getting bigger results when I trade my own account, but I also have bigger knocks, significantly bigger knocks. Anyway, so today I was meant to trade Europe this morning, and then I just got engrossed in this. I got engrossed in doing this research on the US, and I must admit, I really do like that particular angle about our vocation. Absolutely love the research. And so I have a gentleman whose name shall be nameless, but he is a genius. I don't think he actually likes me calling him a genius, but he is a genius. And he gives me these charts here. Now I know I can probably get someone to automate it, but as Bryce Gilmore once said, you also learn things just by studying the charts. And what you're seeing here, it'll take a little explaining because I'm going to make this data available to all of you. Not today, because obviously I want to do the work myself. But what you're seeing here is, by the way, so this is New York time, and this is the Dow Jones, and this is the first 15 minutes of opening time. And what you're seeing here in the gray is an attempt to create a overnight range. And the blue line represents the close from the night before. And so what we're seeing here is the first 15-minute bar and the second 15-minute bar. And that, because it's technically outside the overnight range, it triggers a long signal. Well, what I want to do is I want to show you just how extensive this is. So just letting you in on just how much data I'm going through. As you can see down here, this is 1,343 items. Now, considering there are approximately 240 trading days in a typical trading year, well, it stands to reason that we are looking at what? 7 years worth of data here? Is that 6 years worth of data? Is 6 times 240 not, well, 6 times 25 is 150 minus the 6, so that's 144. So 1,440 would represent 6 years, so it's a little less. So it's about 5.5 years worth of data. And I go through this manually. If any of you want to help out, you're more than welcome to. Maybe we can talk about that. I place this as a downloadable in the resource channel on my Telegram channel. But so I'll show you a couple of examples. So here is the first bar and then the second bar. And so my hypothesis argues that if the school run triggers a sell, but it takes place inside the trading range, instead we should be a buyer. Okay, so it worked out here. So you go through these charts one by one. Say, okay, here you have the first bar, second bar, it triggers a sell, but it takes place inside the trading range. So now this should be a buy. Now here's the advantage of having research. It's like you're saying, well, that's not a very good idea. No, clearly it isn't a good idea in this example. And so as you go through years and years worth of data, you create a hypothesis that has at least two facets to it. One, what is the quote-unquote most successful path? And two, how do you deal with the inevitable losers? How do you minimize them? And can you turn the losers into winning traders, winning trades somehow? So we can take another example here. Clearly that's a... So we're going back to... So I'll just sort of skip past some of the Christmas days and we'll just take some of the... So, okay, so here is a first bar and second bar in the Dow, and it triggers a sell here because it goes on outside the trading range. So what we can see here is that, okay, it looks very good to begin with, but very shortly it turns into something which isn't very good. So now what my inquisitive mind then goes to do is to say, well, how can I deal with a scenario like this where I'm getting a short trigger because it takes place outside, and then I see a reverse back into the trading range. How do I deal with that? Do I have to factor in the length of the first candle? What can I do to make sure that a situation like this doesn't turn into an absolute clusterfuck of first I am short, and then perhaps I'm long, or do I sell short once more up here? And that's what the research is really all about. And personally, I quite look forward to sharing this with you, because I think one mind, one set of eyes, great, but many sets of eyes. And so if you have that attitude that I have is, well, let's try and work this as a team together. Well, then I think we're really going to make a significant amount of progress. So let's just give you another example here. So here's the first bar, gap. We have a gap up situation, small. Then the second bar triggers well, I can't tell you if it triggers a short first or a long first. But either way, if I bought here, I probably would have done all right. And if I shorted here, I probably would have done all right. What research like this has also instilled in me is that the real critical points in trading tends to be below prior bar low or above prior bar high. For example, what my research has truly uncovered, and I utilize this approach all the time when I'm trading, is, and I can show it so clearly, can we agree that this bar, this bar, this bar, this bar, this bar here, well, it looks like that's a pretty good uptrend. The moment I get an opportunity to buy below prior bar low in an uptrend, the odds are in my favor. Now, it doesn't happen so often, but when it happens, it tends to be a good trade. And if you go through, and that's why I'm so grateful for this gentleman here, because having to sit and cut these charts out manually is hard work. It's really hard work. But and then it enforces that kind of behavior. Oh my God, it does seem to be a good idea to be a buyer below prior bar low. And it really does seem to be a good idea in a downtrend to sell above prior bar high, sell above prior bar high. Until, of course, it's not a good idea and you have a loss on your hands. So you need to find that fine balance between I want to be decisive, but I also want to be, shall we say, not reckless. Now, there are many open-ended questions here in research, as there always is, and I would never want to pretend to be the one that has all the answers. I find that attitude fatal to the trading instinct. Yes, I'm a very confident trader, but no, I'm also, shall we say, I'm humble enough to know what I don't know. And I think that's an asset. I think that's a gift to have, to be absolute confident in your trade. I'm going to do this, but also humble enough to go, well, it might not work out. As opposed to having the attitude of, I have created a rock surefire system and it never fails. And I know how the market works. Right? That's just not for me. So that's why I am perhaps not with you on this Wednesday, even though I think I did say something along the lines of, I'm going to be with you tomorrow. That was yesterday. But sometimes I get a little carried away with, wow, I got all this wonderful data and I want to crack a hole in it. All right. So this is a really short video. I suppose I did this video because I wanted to give you an idea of what I do when I'm not with you to trade. It doesn't mean I'm not working. I also wanted to give you an idea or an update on this 500-day cycle, because I think this is really interesting. Take this low down here. Let me draw it here. And now keep an eye on this counter here when I double click. See that? So now I double click and we count that lowest point here and we go forward. And you will see that we end up, and this being the 72-week cycle. So far, it looks like that we've had a high here and we're trading lower. But we can't be completely blind to the fact that this is a significant bull market. And if I stuck a moving average on, which I rarely do, but let's just go for a 50-period moving average, you'll also see that the trend very much is still firmly up. And you can do it on a daily, and then you can do the same and see, well, the 200 is usually the one that sort of decides whether it's a bull trend or Not sure why it's not there. It just took a little while. So let me remove the 50. So here's the 200 still firmly up. So I still think that this is a bull market, but I just think it's interesting to have this idea that the 500-day cycle may have peaked. Okay. And then I just finally wanted to tell you that I have added to my position. I have a target in sterling dollar around 140. I'm happy to show you the chart, and then I want to get going and leave you in peace. But if I show you the weekly chart, I think that we are headed up here at a minimum, but I could also see that we're headed up here to the highs of 2020 and 2021. That's what I think is happening. Of course, it's going to take some time, but so far, so good. Okay, so normal service will resume tomorrow. I will consider if I should post all of this publicly so people can support and help and chip in, and I imagine that there's many people who would be interested in this, in participating in this work here, because it is bloody interesting. What's interesting about it is that, well, how can I make money from this? How do I do this? How do we define the overnight range, perhaps better than has been done here? Okay? That's me done. It was a short little session. Just wanted to give you an update of what was going on. And perhaps also apologize that I wasn't here this morning, because I do distinctly remember saying, well, I'm going to trade with you this morning. But I kind of just got lost in research. Yeah. Thank you. As always, from my point of view, this is a shared journey. And I am always grateful when people reach out to me and they share their observations and their perspectives. And that's exactly in the spirit of what I'm trying to do here. All right, let's stop yanking each other's touches and just get on with it. We are, after all, so in the business of making money. So off you go, and I'll do the same. Bye for now.